Well, good afternoon to everybody. Thank you so much for joining this track session on challenges and opportunities for agricultural and applied economists in the agribusiness sector. So we all have the pleasure to have here 4 speakers that have a very important background in the agribusiness sector. And then, so let me introduce Nathan Kaufman. So we're gonna also hear Michael Serr, Michael Gunderson, and I am not seeing here John Newton, but hopefully he's gonna be able to join us before the track session ends. This is gonna be 15 minutes presentation for every one of the presenters. Then we're gonna have 5 minutes for questions. And at the end, Timothy Woods is gonna provide some closure remarks on this event. So thank you so much. And let me introduce our first speaker. So he is Nathan Kaufman. He holds a bachelor degree in chemistry from Malone College and a PhD in economics from Iowa State University. Prior to receiving his PhD, Nathan spent 3 years in Bosnia and Herzegovina coordinating agricultural economics development projects. After the completion of his PhD, he joined the Federal Reserve Bank of Kansas City, where he has served as an economist and as the Vice President and Omaha Branch Executive. Nathan provides strategic direction and oversight for the Omaha Branch, regional research, and economic outreach through the state of Nebraska. In addition, Nathan is the Kansas City Fed's principal expert in agricultural economics. He's a leading voice on the agricultural economy throughout the 7 states of the 10th Federal Reserve District and the broader Federal Reserve System. Nathan, the floor is yours. Thank you.
All right, thanks, Carlos, and thanks for the invitation to join today. Like every other virtual meeting that I've been doing recently, I'll start by saying I'd prefer to be in person, but I appreciate the coordinators of the meeting continuing and helping to facilitate. So thanks, Carlos, for stepping in on that. Give me just 1 second here to share my screen, and we'll get started in a minute. See if I can find it. All right, so hopefully everybody will be able to see this. I'm gonna make it full screen. Let me start by just saying a little bit more about my role at the Kansas City Fed and why I want to talk about this particular topic this afternoon. As Carlos said in the introduction, I am with the Federal Reserve Bank of Kansas City. I live in Omaha. Our head office is Kansas City. We've got a branch in Omaha, one in Denver, and one in Oklahoma City. The way I often describe my job to people is to provide input from the state of Nebraska into monetary policy discussions. My background, my degree, as Carlos said, was from Iowa State with a focus in agriculture and finance. There are not a lot of individuals within the Federal Reserve who provide input that connects to agriculture. So when there are questions that come up that specifically focus on that sector, I'm often involved in those discussions on behalf of the Kansas City Fed. So the topic that I want to talk about today is using applied economics and research to inform business decisions. So this will hopefully be admittedly quite vague, but try to offer just some things that I've learned in being an economist at the Fed. Oftentimes when I describe the value of working as an economist at the Fed, what I will tell people is that you still are very involved in research. We are very active in that front. We've got a number of economists that are working to actively publish research in many of the same outlets that you're all familiar with as economists. But the Federal Reserve is also pretty critically tied to industry. And so we have a lot of interaction with industry, with businesses, opportunities to ask them questions, hear their input, what sorts of things are they facing in the real world, which gives us a better opportunity to refine the research by having some of those interactions. And so I want to talk about how, as applied economists, you might use some of that research. I'm going to hopefully keep my comments pretty brief because I'm looking forward to the questions and be interested in what other people have to say. So just before getting started, because I know that not everybody is probably familiar with the Federal Reserve, the Fed is the central bank for the United States, but it is a fairly complicated system. When we talk about the Fed, we typically start by identifying two separate entities. One is the Board of Governors in Washington, D.C. So if you're familiar with some of the comments from Jay Powell, the current chair at the Board of Governors, he would be one of 7 governors at the Fed when it's fully staffed that are regular participants in monetary policy discussions, the Federal Open Market Committee in particular. The system, though, also consists of 12 regional reserve banks, and so those are the shaded areas that you see here. As I mentioned, the Kansas City Fed is one of 12. Our bank president then would be regularly participating in FOMC discussions on monetary policy, and so a big part of our job is to provide information for her as she's participating in those meetings, and more generally in support of economic thought on behalf of the Federal Reserve System when there's questions that come up where our area of expertise might be of use. So just to quickly kind of level set in terms of what the Fed is and what it does. Okay, so I should have had a disclaimer at the beginning that these are all my own ideas. These are not the Federal Reserve Bank of Kansas City or the Federal Reserve System. This is really my best attempt at trying to distill what I think an applied economist might do, not just at the Fed and in a role such as mine or other economists that we have in Kansas City, but more broadly as you are potentially providing support for a certain sector of the economy, maybe a specific business and so forth. I will also note that for anyone on this call that's interested, we're hiring. So go out and look at the Joe website, and we do have an opening specific in ag that we're looking to fill and we'll be interviewing for in the next couple of months. So my take on the job of an applied economist, as said as simply as I possibly can, is to develop and communicate ideas that are useful for decision making. So I want to focus on a couple specific elements of this as we go through here, but want to just highlight this as sort of the starting point for what I see as the role of an economist. So there's a few different steps that I see as being involved in trying to get to the point where we are able to communicate an important point. And the first step is, I think, generating ideas. So how are you going about generating research questions, research topics? Are you reading from a wide variety of material, being bold enough to ask questions, get to know other people that have looked at similar topics? Don't be afraid to be wrong as you're trying to identify what those topics might be, because the goal of what you're trying to get to at the end of this step of generating ideas is to have a very specific question that you're trying to address. So that's sort of the next step then, as I see it in this process of generating ideas. What's the goal of your research? When you're, again, in a specific environment where you may be involved with a particular business, an agribusiness, or otherwise, it might be a bank, it might be within the Federal Reserve, it might be a very specific question that's something like, what's our optimal cost structure for next year? Or how will a change to some policy X affect our business in the next 6 months? You might have a very specific question that you're starting from, and the more specific that question is, the easier it will be to get to the next step in this process of generating ideas, which is asking whether or not your question is sufficiently focused. So I came up with a couple of examples here just to try to make my point. And I'll admit that a lot of my thoughts here are not necessarily specifically tied to agriculture, but rather skills that would be useful in the context of supporting in agribusiness, or, you know, information and decisions that would, I think, also connect to an agribusiness. So the two questions, just as an example, you know, one question might be, how has the pandemic affected the economy? And, you know, that might be a relevant question right now, but it's just way too general. It's way too broad. If you were to try to address that question and try to think about where you would start in the research process of answering the question of how has the pandemic affected the economy, you would be led in too many directions. It would be very difficult to get your arms around that kind of question because it's just too broad. A different question, though, might be, for example, how has the work from home environment in urban locations affected small businesses in the retail sector? Okay, so here you're still looking at a particular aspect connected to the pandemic, but you're refining it to be in a particular location, meaning in an urban setting. You're looking at a specific segment or subset of the economy, being small businesses, and maybe even a specific industry like the retail sector. You'll have more to work with in that sense. You'll maybe have a better sense of where to go as you're exploring data. So I think that, you know, what I'll show on the next slide is that during the course of the research process, you'll also be constantly coming back to this slide of generating ideas. The last comment that I have here is to leverage your curiosity. And here what I mean is don't underestimate the value of doing exploratory analysis. Lots of simple charts that you might look at, asking yourself, you know, what is this chart telling me? What do I see? What's surprising? Constantly trying to ask yourself, what else are you missing? What else might you be able to look at to better inform your understanding of the topic and the research question? So again, in this step, the entire focus, as I see it, is getting to the point where you have narrowly defined the research question that you're pursuing. So the next step then, and this one only happens after you've identified the research question, is then to go about testing your ideas. So how have others, for example, approached the question? How have they attempted to answer it? My first recommendation here is, do you know any of the others? So for example, if these are faculty in your department, or if they're people in industry, most of the time people are pretty willing to connect with you if you're demonstrating an interest in the question and really wanting to learn a little bit more about what might be involved. So as you're attempting to learn more about how others have approached a research question, you know, you might ask yourself how it's related to or different than the question that you're going about trying to answer, what tools have been used to try to answer the question, for example. And again, all of this as part of the process of analysis. So the next step then is, you know, number 2 here, how can you best answer this question? And my best advice that I can give here is, do not overcomplicate it. Remembering that in the context of an applied economist, and as you are involved in trying to communicate your ideas, eventually you will need to explain yourself to someone who probably doesn't understand it at the same level as you do. So as you're thinking about what tools you're going to apply to your research question, my advice would be, try to keep it as simple as possible. The level of complexity will be dictated by necessity, rather than, you know, looking to try to add unnecessary things to a particular model to try to get an answer. Your goal is ultimately to communicate a finding, as opposed to, you know, generate a method. The last step that I would add on this one then, in terms of testing ideas, is to learn from your analysis. And in this step, you're probably going to realize somewhere along the way that you've been answering the wrong question. And during the course of this process, you'll find that you actually have to go back to the previous slide of generating ideas, because, you know, you've maybe realized that your question was not sufficiently narrow. You didn't add a particular element in your question. It wasn't well defined. And you're going to go back to the step of generating ideas before you get to the portion of being able to communicate the main findings that you have from your analysis. So that's the last and final step then that I would highlight here, is communicating ideas. The first thing that I would suggest here is your main point that you're making, whether this is in writing or in a speech, needs to be frustratingly concise. And what I mean by frustratingly concise is that you should probably pore over this one sentence that describes your main takeaway point for a very long time, because as you're doing that, you'll realize that there is extraneous material that shouldn't have been included that ultimately will distract your audience from trying to better understand the point that you're trying to make. So the value that you provide as an applied economist, and again, this is, I think, it's relevant for agriculture, but probably other industries, is not to just report the data and results of a model. Your goal is ultimately to explain why your results matter and why people should listen to what you have to say. And so as you're thinking about communicating your ideas, keeping it very concise, very clear, using non-passive language wherever you can will be helpful. The second step that I would say here, or piece of advice, is to always know your audience. And this is throughout the course of the entire research process. So this is not just as you're communicating. You do obviously want to know who it is that you're going to be communicating to. Am I going to be talking to my CEO? Is this senior management? Is it a board of directors? Is it the general public? Am I talking to other economists? The reason that matters is because how you describe the level of complexity is going to depend on who your audience is. For the most part, economists have a tendency to overcomplicate their key takeaways. And so my advice here is to try to make it very simple and direct in terms of whoever your audience is. But know who your audience is, not just as you're going through the communication of it, but also as you're going through the research process itself, because you might realize that there are different ways to go about, simpler ways to go about getting to your main point. The third point here that I have is to write it or say it, for that matter, like you're trying to convince a skeptic. Really what you're trying to do to add value to those in a decision-making role is to inform them why they should care about what your research says, and then ultimately what the main points of your research would be. But in order to do that, you might start, for example, with a very clear main point, and then you want data that ultimately is going to be able to support it, that is, sort of irrefutable. So you're going to use material to help support your main point in a way that's extremely clear and concise. And ultimately what you're trying to do is bring along a reader or your audience to understand why the point that you're making is something that needs to be considered during the course of decision making. Number 4 here, shorter is almost always better. If you can cut out extraneous material, that is better. I will say from my experience, it is harder to write a 2-page paper than it is to write a 20-page paper. When you're writing a 20-page paper, you can include all kinds of material that may or may not be relevant. When you have to write a 2-page paper, you are forced to decide what matters most. And when you're forced to decide what matters most, ultimately you're taking a step out on a limb to say, I'm going to tell my CEO that this is what's important, as opposed to 18 other things that I might have included. So that is it's a difficult thing to do, but I would say that shorter is generally better. Number 5, kind of on that same point, keep your charts clean and simple. And this is especially important during the course of a presentation. I see a lot of charts where people will have 8 different lines on a time series that's extremely volatile and go back 30 years. And maybe none of that is really needed to make the point. All you really needed was 1 bar. Again, kind of going back to what I said earlier, don't overcomplicate it. The value that you provide is to make a point based on your own analysis, based on the insights that you've been able to generate. And the more that you can do that with a very simple chart, the better that is. And then lastly, I would say always restate your main point at the end. You're going to do this at the beginning because you want to ultimately draw in your audience. You need to have some hook so as to describe why they should care about the topic that you're looking at, but then restating it at the end so that it's clear and they know what they're walking away with, because most of the time in a business setting, the time of senior management, CEOs, boards of directors is extremely tight, and they're looking to try to get whatever information they need in the shortest amount of time, recognizing that you're the expert. So that's my advice for this afternoon, and I'll stop there, but be interested in any questions that people have and discussion from the rest of the group. Thanks, Carlos. I'll turn it back to you then, and be happy to answer questions whenever appropriate.
Thank you so much, Nate, and very, very interesting insights on your background on how to develop ideas and to communicate them. So I will open the floor for questions. So all of the participants are invited either to write their questions or to start speaking. Here we have one question about internships availability for students. Okay.
All right, so for some reason it wasn't letting me unmute there. So it looks like we're all participants and the host is probably doing that. There are internships available at, just depending on what the opportunity might be at the Fed. Oftentimes those will range from someone who is pursuing an undergraduate degree all the way to, you know, just depending on which bank it is, people who may be during the course of a graduate program. They're typically defined 10-week internships over the summer. We've often had some interns in Omaha, but Kansas City has also had some, and I imagine the other regional reserve banks would do something similar. So they're typically 10-week internships that the role is sort of defined at the outset. There are also, I will say, opportunities not just for internships, but also for potentially master's level students, you know, people who have some applied skills to be able to look at a project that doesn't necessarily require a PhD for it. So good question on that. So a question here I'm seeing says, how short should a submission of the job market paper be if we're applying to a place like the Fed? I guess my first answer to that question is the length should be dictated by whatever you need to communicate your main points. And to start from that perspective, I tend to not think a lot about length because I think that can cause you to get into trouble. But rather, if you're thinking about what do you need to do to effectively communicate the main point of your idea and constantly challenge yourself probably to make it even shorter. Because in making it shorter, you're making it more concise, you're making it clearer for us to understand. The reality is that when we are evaluating job market papers, and not just job market papers, but I'll say the same thing about CVs and resumes. When we're evaluating CVs, you know, the economist position that we're seeking to hire for last year, we probably got 250 applications for it. And we have to start by screening for a particular thing, you know, somebody that has a particular skill set in this area. And ultimately you're going through a lot of material trying to get to that point. So time is at a premium for whoever's going through that process. The more quickly you can convey your main findings, main ideas to someone who's in that position of evaluating some of that research, the better. So I would hesitate to give a specific length on something like that, but would rather just challenge everyone to focus more on what do you need to do to effectively communicate your main points. Looks like there was another question, struggles with reporting to bosses that have political agendas and or predisposed to counter your findings. So that, I mean, that's a good question. I guess where I come at, and actually one of my reasons for joining the Fed to begin with is the Federal Reserve is an apolitical organization. We don't have, and in fact, we don't make policy recommendations. My responsibility as an economist is to do the best I can at identifying what the questions are, taking the data and presenting objective results to then the best that I can to make them objective. So in this particular case, I think that we always challenge ourselves to be as unbiased as we possibly can. I think that it could be challenging if you know, you find yourself working for an organization where they're looking for a particular answer, and your job is to find how to get there. I would, you know, try to encourage those people to you know, still as your credibility depends on it as an economist, to do the best that you can to make your analysis as objective as you possibly can. I mean, at the end of the day, you're probably still going to have to take a position on something. And, you know, that position is going to be determined to some extent by your background and experiences and maybe even your own worldview. But being clear about how you got to those results, I think helps limit the potential for, you know, to get tied into or stuck, you know, alongside some sort of other political agenda. So good question. So suggestions for Ag Econ students who want to enter fields that traditionally hire more non-Ag Econ students, and additional courses or skills to develop ways to frame the advantage of Ag Econ. I think the first thing that I would say kind of goes back to my point about knowing your audience, because I have been a little bit surprised during the course of my career. People who are not in the world of agriculture who think that they don't understand agriculture, but the concepts that you apply to an industry like agriculture from an economics perspective are not really any different than they would be for most other industries. And, you know, that's why you go through all of the Econ 101, 301, whatever that is. So I would say, you know, the more that you can know your audience and where they are as you're describing the value that you might be able to provide, is going to leave you that much better prepared for ultimately marketing yourself to those sorts of organizations. You wouldn't want, for example, to go into a non-ag type of organization and all of a sudden start using a lot of jargon that only people in agriculture would understand, and using acronyms that ultimately they won't be able to understand. You're going to want to be able to typically put your research at a higher level, describe conditions at a higher level that ultimately will be of broader interest that way. Just a quick comment, I guess, on the courses or other skills to develop. I would say, I think that typically during the course of a PhD program, communication gets not enough emphasis. If you're interested in exploring a career that is outside of academia, a very substantial portion of what you're responsible for is communicating your research, communicating your findings. That might be written, but it might also be a presentation. So practice delivering your thoughts in a way that is clear and concise. You know, not necessarily suggesting taking speech classes or communication courses, but really trying to focus on how you might better refine that skill of not just doing the analysis and doing the research and all of the things that you learn in a PhD curriculum, but then how do you actually communicate the findings that you want to make sure are heard by whatever your audience might be.
Thank you, Nate, for your answers, and thank you to everybody for the questions. So then I'm gonna move to the next speaker. The next presenter is Michael Gunderson. He holds a bachelor degree in agribusiness, farm, and financial management from University of Illinois at Urbana-Champaign, and a MS in agricultural economics from Cornell University, and a PhD in agricultural economics from Purdue University. He has been professor at University of Florida and at Purdue University, where he has taught classes related to agricultural finance and management. At UF, he also served as the graduate coordinator, and at Purdue University, he served as the director of the Center for Food, and agricultural businesses. Currently, he's working as the head of agricultural research and strategy at MetLife Investment Management. As a director, Michael provides leadership to market analysis of annual and permanent agricultural crops, forest and timberland products, and agribusinesses. In his role, he shares market insights regarding agricultural trade conditions, commodity price forecasts, and industry dynamics to support MetLife Investments Management portfolio. So, Michael, thank you so much for joining us this afternoon, and the floor is yours.
Thank you, Carlos. I appreciate the work the team has done to put this together. And much like Nate, I would prefer to be in person and have that interaction, but glad to be able to connect regardless. So just like Nate, also, I should share a little of my background and then a little bit about MetLife before diving into any advice in terms of making the transition from academia to industry. I did finish my PhD at Purdue and then spent 6 years as a faculty member at the University of Florida and then 7 years back at Purdue University. And really, I was very closely tied to industry the entire time. I've always taught agribusiness and finance in my undergraduate teaching as well as in the graduate teaching. So for me in particular, I've always been tied to industry pretty closely. And so it was an interesting opportunity that came to me. So often folks might interpret that I left Purdue or a place because I wasn't happy. Purdue University is a great place, and the agriculture economics department there is a really excellent place to work. I wasn't leaving a situation that I didn't enjoy. This was just a particularly interesting opportunity for me to try something I'd never done. So I had gone straight through from undergrad to graduate school to being a professor, and I'd never left academia. So this was an interesting opportunity. MetLife, most of you probably know them from their business of selling life insurance, and some of you might associate them with Snoopy because for a long time Snoopy was a part of their ads. Snoopy's not a part of our organization anymore. Apparently he's a little bit too expensive. But even my parents, when I told them that I was going to join MetLife, were surprised. They didn't think that I wanted to sell life insurance, and I certainly didn't want to sell life insurance. But what they didn't realize, and what many folks in agriculture don't realize, is when we pay in our life insurance premiums, those insurance companies have to do something with that pile of money. They need to be able to invest it and be prepared to return that cash to the folks that have life insurance policies sometime in the future. So I actually joined the part of MetLife that is the MetLife Investment Management Organization. We have more than $500 billion of assets under management. We do that largely for the MetLife affiliated insurance companies, but we also have other clients that use our investment management. In regards to agriculture, I'm part of a group, the real estate and ag team. We have a little over $100 billion in assets under management in the whole group, and the agriculture part makes up about $20 billion of that. So we exclusively at Met provide debt capital to agriculture, primarily through long-term asset-backed mortgages. On the real estate side, we do mortgages, but we also invest in properties. For us at Met, we don't invest in any agricultural properties. Some of our competitor life insurance companies do invest equity into land, but we do not. So as I mentioned, we're the largest lender to the sector that's not government-backed and largest in terms of ag real estate mortgages. So about $20 billion to the sector. Farm Credit Mid-America and Farm Credit Services of America also have about $20 billion portfolios. So we're comparable in size to them. And so we end up being what I perceive to be the best kept secret in agriculture. We have a 100-year commitment to agriculture. MetLife helped farmers through the Great Depression. They worked closely with them through the 1980s farm crisis to be able to stay on their land where it was possible. So We have a long-term commitment. And in terms of COVID-19 and the impact on our business, it really hasn't influenced the origination team much because they've always worked remotely. They've always been embedded in their communities and viewed as experts for their local areas. So, so that's a little bit about MetLife and the ag team in particular. For me, I mentioned it was a perfect opportunity for me because it was an opportunity to be connected to research while also connected to agricultural production. So I have a team of two fellows, Tom Carmel, who got a master's at Purdue, not with me, but a master's at Purdue, and Blaine Nelson, who did a master's at the University of Illinois. They're part of the team, and we end up being, out of 400 or so people in the building in Whippany, New Jersey for the MetLife Investment Management, the three folks that people look to understand agriculture. And even though all three of us have agricultural economics degrees, folks often look to us to just have ag knowledge in general. So that's a fun and interesting challenge. Nate put together slides, so I feel like a slacker today, that, and I'm wearing a hoodie. So hopefully Nate set the bar and I can live up to it without PowerPoint. So I've got some notes, and as I was thinking about the transition, I want to think about who, what, where, when, why, and how of making the transition from academia to industry. So, you know, in terms of who you impact, it's very different. As a faculty member, I felt like my sphere of influence were the students that I taught and the colleagues that I worked with, and I wasn't really sure necessarily how much of what we did impacted the broader agricultural community. Whereas at MetLife, I don't have an opportunity to teach. It probably is a part of the job that I miss the most, but I do have the opportunity to really help others understand agriculture and agricultural economics. And so the funnest days at Met are when I'm meeting with a group of investors and helping them understand what's going on in the sector, what impact things like COVID and trade wars are having. So, you know, internally, we answer to the investors. Externally, we answer to the borrowers of our dollars. So we really try to keep our pulse on agricultural producers and what they're doing and the struggles that they have and how that'll impact their financials. So, you know, it's just a different set of folks that you impact. One's not better than the other. And I think, you know, as I go through this list, that's generally true. One isn't better than the other, but they're just very different. So who, what you impact, I think in academia, I always felt like we are trying to move the frontier of knowledge, whether it's in our research programs or our teaching programs or our extension programs, always trying to constantly move that frontier of knowledge. Inside of Met, at least, my experience in industry has been much more about informing the current state of things to decision makers. So helping folks make trade-offs and understand how the current environment and the current understanding of the environment informs their decisions. So who, what, where we impact. So I wouldn't say it's a lot different in terms of geography. I think our programs at Purdue were recognized around the world, and I think certainly across the country. I think at MetLife we have a national scope, and so our geographies aren't different in terms of where the research impacts folks, but I do think that in my role at Met, at least, I have a bigger impact on non-ag folks than I did in my role at Purdue. So I think we certainly answer to a lot of investors that don't know a lot about agriculture. They're trying to pay attention to a lot of different sectors simultaneously. And so they really want to get that message about ag pretty quickly. So I feel like in that way, my sphere of impact has broadened a bit. You know, if you think about when do you impact, I always felt like in academia, our impact was really hard to measure because I think you impact the long term much more than you impact the immediate term. I think your research programs and even your teaching programs, it takes a while for your efforts to really materialize and crystallize realize and recognize the payoff of that effort, whereas our impact in industry is immediate. And part of that's driven by MetLife as a publicly traded company, and so things happen on a quarterly cycle, which feels pretty quick. Like at first you think to yourself, 3 months, that's a long time, but as you get into the quarterly reporting cycle, man, 3 months will go by and you feel like you just got done reporting and it's time to report again. So, you know, our analysis informs quarterly asset allocation for MIM, and so those are things that have to be much quicker than I felt like the pressures were at academia. And I think, you know, in terms of a tenure track position, you've got what feels like a really short time period to tenure, but that's even more accelerated, I would say, in industry. Why? About the impact, really, there's no difference. I think in terms of motivation, in terms of satisfaction and the enjoyment I derive from my positions is knowing that we're working to help improve agriculture. So I think when I was an academic, that's pretty obvious, trying to help young folks develop their skills and be successful. But I think, you know, in an organization like MetLife Investment Management, we're really on the cutting edge of ESG considerations. Last month, we started a green fund to really try and improve the environmental sustainability of a lot of different sectors, and our ag portfolio is going to participate in that. And so I think the organizations that I've chosen to be a part of are really interested in making agriculture productive, reducing its impact on the environment, making sure we do things in a way that's sustainable. So in that regard, the motivation is exactly the same. The last piece, how, and I think, you know, you probably could just go back and look at Nate's notes for this part, because the things that I prepared here were very similar to what he said. I think in academia, there's much less pressure to be concise. You know, and I suppose having been a journal editor and knowing other journal editors, they would push back on that some and say, you know, we've got to tighten it up some, but very rarely in industry are you going to be doing 10 to 12 pages of analysis for folks to have to wade through. You know, and I think Nate mentioned trying to boil it down as much as you can. And I would say even more than that, in industry, folks are looking for bullet points rather than even complete sentences. So I've on occasion handed an investor a page or two of analysis, and they asked me to boil it down even further for them. And I think Nate made the point, and this is really critical, when you have to do that, it forces you to prioritize the information for the decision maker. So what you choose to put into those bullet points is almost less important than what you decide to omit. And so when you have to really boil it down, it's your analysis of wading through all the noise and trying to come to a place where you can help make a recommendation to the decision maker. So it's just a very different way of communicating in industry than it is in academia. And I think, again, it's not better or worse, it's just different, and knowing your audience and being able to deliver to that audience and helping them be successful makes you successful as well. The only other thing I'll mention, because people ask, you know, are the politics different? Are the politics worse or better in industry? And I just have to say they're different. I think a different set of politics and players at a university setting versus at a large company like MetLife or MetLife Investment Management. So I think, you know, somebody that has a PhD or even somebody that has a master's degree, I would say, has a certain level of, in an initial meeting, a certain level of expectation that you are well prepared. And so I think as long as you can live up to that initial expectation and carry it through, you'll have an extra tool in your pocket that other folks don't. So you'll be able to quickly navigate politics outside the university if you were able to do it inside the university. If you struggled with it inside the university, you're going to struggle with it outside the university too. But just different systems and channels. And the biggest difference for me between being at the university and being at MIN is always thought on occasion, the times where I had to check with the university lawyers, it was a hassle, or at least a challenge. It's the same in industry, only tenfold. The lawyers are always involved. It feels like we have to get their sign off on a lot of things. So that's probably been the biggest difference for me in terms of transition. But a year in, I love the job. I love the folks, love the organization, but I still tell people when they ask, the best job in the whole world is being a professor. So I'll leave you with that.
Well, thank you so much for your presentation and for those insights. I will open the place for questions. So please use the chat for question. I am seeing some questions already. So
yeah, I see Jessica's question about search for ag econ relevant jobs in the investment management space. So, you know, I have been thinking about this as an academic. I never created a LinkedIn page, and I'm not so old that LinkedIn predates me from my time on the job market any of the times. But I feel like as academics, we don't typically use LinkedIn. I know some of my colleagues are on there, and I really only ever joined LinkedIn because as I participated in the MSMBA program at Purdue, the director of that program gave me a hard time for not being on LinkedIn. And coincidentally, it's the thing that led me to this opportunity. MetLife Recruiter reached out through LinkedIn based on my profile. So I think, you know, building a profile like that out there and then connecting and interacting with folks will be helpful in being able to make those connections.
I think we have another question.
Yeah, so one question about where to connect for folks in agribusiness. You know, I think coincidentally, one of the best opportunities to connect is with Nate's event that he has. Nate's event that he has there in Kansas City every year is a great place to connect. I know the folks at MetLife had interacted with me there before they contacted me. So there are several Outlook kinds of conferences like that that the financial industry is at, paying attention to and listening to. So that's a good place to connect with folks. I think Dawn's asking about LinkedIn. Does the profile matter, or do those recommendations make more of a difference? What in a profile stands out? So I think particularly when I look out there for talent, there was a question about interns at the Fed. We had an intern this summer. Ailey Elmore is a master's student at the University of Illinois, and she interned with us this summer. You know, I think for being able to look out at a profile that has the skill set that you want. So I think one of the strengths of a good ag econ graduate student is they have a set of analytical skills that they can bring to a research team, and just having a passion for the industry. I don't think it's definitely not a requirement to have come from an ag background, but to at least have some passion for the sector and the things that are going on and understanding it. I think those are things that are helpful when we consider folks for positions. Yeah, Amanda asking a question about what skills were most important when you transitioned from academia to industry. And I would say, relative to somebody that's just finishing their master's degree or just finishing their PhD, it's a little different for me because I, had been an academic for 13 years and joined MetLife in a leadership role. So for me in particular, it really became about communication. So being able to communicate clearly and concisely in writing, being able to communicate clearly and concisely with statistics and graphs. I think those were much more important in the new role than they were relative to the old role. And I suspect that's true. If I asked Tom and Blaine, they would probably say that's true. More being able to help folks understand the results rather than is now more important than the sort of guts or the number crunching that you do. It's on the other side of that. What are you going to do with those numbers? It's not to say, you've got to have, it's just table stakes to be able to do good quantitative analysis, particularly in investments.
Thank you so much, Dr. Gunderson. I think that we don't have more questions. So thanks so much for all of those insights. And then I will introduce Mike Sir. Mike Sir holds a bachelor degree in general agriculture and a MS in agricultural economics from University of Missouri, Columbia. He has worked for the U.S. Meat Export Federation as trade analyst, where he contributed to the analysis on trade policy alternatives for the U.S. beef and pork industry and to the forecast of U.S. beef and pork exports. Currently, he's working at Cargill, where he has served in different roles. As a beef economist, he contributed to the forecast on cattle production prices and collaborated with a team to manage risk through futures and options. As an economist, he has collaborated with an interdisciplinary group on the development of long-term insights regarding food and agriculture. He has contributed to the analysis of long-term grain and oilseed trends for Cargill's agricultural supply chain, and to the analysis of consumer demand and economic drivers on different businesses. On his most recent role, he is leading the analytics team for Cargill Protein Group, where they conduct analysis on trade meat commodity markets and inform strategic decisions. Michael, thank you so much for joining us this afternoon, and the floor is yours.
Can everybody hear me?
Yes.
Can you see my slides by chance?
Yes, we can see it.
All right, very good. Yeah, thanks for having me. Happy to be here, virtually as it were. Would love to be in person, but obviously these are strange times. But certainly happy to be here and happy to be invited, and certainly looking forward to having a discussion about what it's like to have a background in economics and then work in a large corporate organization such as Cargill. So I thought about calling this the Confessions of a Corporate Economist, but I didn't want to oversell it. I don't really have anything really juicy to confess today. So we'll just talk about general observations of what I've seen and be happy to answer any questions. So yeah, like everybody, just maybe a few comments about who Cargill is and what we do. Really, I tell people that Cargill moves products across space, time, and form. Most of you are probably familiar with the space piece. Cargill moves products like corn, soybeans, wheat from places of abundance like North and South America to places of deficit like Asia. we move meat from the Midwest to the coasts. That is what we've done for over 150 years, and that's probably what we're most known for. But we also take things like those raw materials and turn them into food ingredients that you'd find in everything from salad dressings to cookies to candies to sodas, everything else. So we are a large chunk of our business is taking those raw materials and providing them to food manufacturers like General Mills and Nestle and other folks like that. We also are a decent sized ethanol producer in our wet mills. And then time, we will take grain and we will store it and we will pull it across time and provide it into markets when it's needed, and as well as where it's needed. Obviously, a huge chunk of our business is also just providing insights to our customers, whether it's analytics or risk management or financial solutions is a huge part of Cargill that is not in the physical world, but really managing people's risk and managing their financial exposure. For us as Cargill, we think of market insights and risk management as a significant competitive advantage for us. We'll talk a bit about how we've had that advantage over the time and how it's changing. But for us, a huge portion of our business is trading around our physical positions to generate extra revenue by understanding where the market's going from a price perspective. If you don't know about Cargill, we're in about 70 different countries all across the world, 155,000 employees. We continue to grow, and we're always buying or selling something. I don't think there's been a year that I've been with Cargill that we haven't bought or sold part of our business. So we're always growing, and we're always refocusing where our assets are going to be. So what sorts of roles are there at a place like Cargill? So if you have an economics degree, particularly one that is an undergraduate economics degree, those types of folks are all over our business. People who have econ or ag econ degrees are in sales, they're in pricing, merchandising, finance, treasury, sourcing, just general commercial management. You can't throw a rock at Cargill and not hit somebody who has a background in economics, particularly an undergraduate economics degree, as a way to come into the business, just as a good foundation of understanding how markets work and what Cargill's role is in that. There's obviously fewer people at Cargill that have graduate degrees, and those folks tend to be in either the analytics space where I work, or in specialty roles like treasury or other places where you might need somebody with a PhD understanding of economics. There's a handful of PhD economists at Cargill over the years that I've met. I don't know of any in my group, to be honest, but most of the folks in my group are sort of master's level economists work in the analytics space. My own experience at Cargill really has been focused on two main areas. One is working as a commodity analyst. So I've worked I was the beef analyst for Cargill, beef economist for Cargill for 10 years before I moved to Minneapolis, where I live now. And that really is about taking the sort of economic principles, forecasting supply and demand, and then trying to predict price. Cargill has lots of price risk, whether it's in corn or soybeans or meats. And our job as analysts is take whatever information we can, develop a solid S&D, and then figure out where price is going. So we use it for risk management. We use it for proprietary trading. We use it to support business decisions. If the business is asking, okay, do I need more or less staff for Q1 of next year, basis the supply of cattle, my team is going to look at the data out there and say, hey, we're going to have more or less cattle this year, so you need to have more or less people in your plants. Those types of things, just even sort of basic practical, how do we staff our plants, what do we expect for our sales. So a huge part of Cargill's analytics is structured around that focus. How do we help our business make better decisions around price and the S&D logistics? And that's probably what people typically think of Cargill. The other part that I've been involved in, though, is the corporate strategy piece. And that's using economics to try to understand how the world's going to evolve over the short, not in the short term, but more the 5+ type year perspective. Where does Cargill choose to play? Do we choose to put money in Brazil, in North America, in China? What are the parts of the world that are interesting to us from a profitability standpoint? That would include things around mergers and acquisitions and divestitures, joint ventures, things that would work across enterprises. So Cargill has 4 or 5 main enterprises, businesses where we focus our efforts. And as you can imagine, a big organization like Cargill, 150,000 people, we don't always talk or communicate well across the businesses. So a strategic initiative or a strategic opportunity that hits across several enterprises sometimes needs somebody to help pull people together. Alternative proteins is a good example. Plant-based protein, the Impossible Burger type world, something that Cargill has gotten into in terms of providing solutions for our customers. And that cuts across several of our platforms. It cuts across our protein platform because we see it as a different protein option for our customers. So we're providing those types of products for our retail customers. The food ingredients business is selling a lot of the ingredients that go into these products, oils, pea protein. So we're looking to source those things. Will it stay that way? Will it be a different protein in 10 years? How does it scale up? And then our other businesses may have different parts of that are affected. How does it affect our animal nutrition business? How does it affect our other businesses? So I have a role at Cargill in addition to managing our protein analytics, where our focus really is what's the price of beef and hogs going to be the next foreseeable future, and how do we trade that? But I also manage what's called Cargill's long-term model. That is where twice a year I pull together 100 or so people across the business who are analysts and have them provide me their view of their particular country and commodity for the foreseeable future, for the next 10 years or so. Again, as I mentioned before, one of the issues with Cargill is we're so big, we don't always know what's happening in Indonesia or Brazil or Europe. We may know what's going on very deep in those countries, but we don't pull together in one spot that helps us understand how to make good decisions for the corporation as a whole. And so my role is to pull all those disparate views into one place so that we can make those sort of long-term decisions with a solid view of the future based on all of our insights around the globe. So I work with a group called Trading Data and Analytics. Our main focus is on the trading focus. What is the price of corn, soybeans, cattle, hogs going to do? This is just a picture to give you a sense of about 1/3 of our team globally. You can see in the upper right-hand corner all the different places where we have full-time analysts in place, essentially all the places that are either large suppliers or large consumers of agricultural products. We're going to have probably, call it 120 people globally focused on different things. And so we'll have a team in Brazil focused on the S&Ds in that country, a team in Argentina, and then all over the world, similar teams looking at these types of things. Some teams like those in Brazil, the US, Europe, China, where they are big markets, very much, relatively mature from an ag standpoint. We're going to have our best talent, very strong teams, lots of folks with, masters in their respective areas, either economics or crop science, which a lot of our work is on focusing the crop science is going to be. And then varying degrees of expertise around the globe, depending on what we can find locally. That's me, by the way, so you can see where I am in the picture. So, one of the things that we've really focused on going forward here is how does Cargill keep an advantage in the marketplace relative to our competitors? And historically, one of the things that Cargill had that was an advantage was our teletype system. This is a picture back in the 30s, I think, of somebody typing in a message into the teletype system. The teletype system was a very, very old school fax system, kind of a proprietary fax system where we would type into this rudimentary machine here a message, and that message would go to somebody. But we had one of these machines in every one of our facilities around the globe. And so we could, if we saw a rainstorm in Brazil, long before we had radar, long before we had Twitter, the internet, we could take that information and push it to all of our different people across the globe and have a huge advantage. An example here of one of the wires, we called these wires. These were sort of pre-email, and so this was a email from somebody or a wire from somebody, and sort of the wire speak, you know, that doesn't have the T. You know, we would have you know, smaller words because we got charged by the character. This is from 1930, talking about how the old crop and new crop wheat prices were going. So, you know, 50, 60, 70 years ago, even maybe 30 years ago, this was a huge advantage for Cargill to have our assets around the globe, to see something happening in China or Indonesia or South America, and then be able to capitalize that in places like the US where we can trade those markets long before the market knew. Today, that is not an advantage. You know, with the advent of email, this information going around the globe sped up much faster, so that information advantage was whittled away. Now in the world of Twitter and instant media, it's no advantage at all. You know, I'm on Twitter a lot. I watch it a lot. The second cattle trade in Texas, it's all over Twitter. There's no advantage to knowing that before anybody else. If it rained overnight in Brazil, not only did you get 10 different weather reports, somebody tweeted out a picture of the rain in their field. So this wire system around the world is no longer an advantage. And so what does Cargill do in that environment? And so what we've realized is that of course, we still have, you know, people around the world, and they're still collecting information. And our job still is to take that information and to try to figure out how to monetize it and make money from it. Information that is unique and actionable that other people don't have access to. So if you think of around the world, you know, most folks, if you're thinking about, say, the futures trading, which is what drives a lot of our analytics, it's a zero-sum game. You know, somebody makes money on a trade and somebody else loses money on the opposite side of that trade. So making money means you're better than average. You know, most folks rely on analytics that are pretty easy to copy. And of course, you know, most folks lose money. So if you're using USDA data only, you're getting data that everybody has. So if all you have at your fingertips is the WASDE report that comes out once a month or so, that's not a huge advantage for you. Maybe you're a bit smarter than the average bear and you can crunch the data a little bit better. But you need something else really to have a sustainable advantage. You can get broker analysis, and some broker analysis is quite good. But again, anybody who manages, you know, puts their trades through a broker can get that analysis. It's not super special. You can hire a group to provide you analysis. You know, CattleFax is a group that does beef analytics for the industry. They're a very good shop, but anybody with, you know, $1,000 or so can buy that analytics and trade it as well. So it's certainly not something that's hard to copy. Obviously, we use an internal team. So we have our own economists who are building models and over time increasing the accuracy of those models. We're building our knowledge over time, so we're not relearning the wheel each and every day. So that is an advantage. But increasingly what we're looking at is data in-house that nobody else has. You know, examples would include things like, you know, where do we see the movement of grain and stocks levels across the country based on what we see in our own system. Of course, Cargill, you know, reports things like stocks and other internal information to USD and otherwise, but it's not always shared across the business very well. And so sharing that information across the business is something that we're really focusing on going forward. We slaughter, you know, 20 to 25% of the fat cattle in the U.S. So instantly having the data around weights, performance, grading, that the rest of the industry has to wait 2 weeks for is a bit of an advantage. But so is things like, you know, what are our customers doing? You know, what is the flow of product from ourselves to a major retailer or a food service account? You know, in years past, when I started in the business almost 20 years ago, it was very difficult to get that data. It was in our systems, but it was in a way that you could only pull it out into a spreadsheet or a CSV file, and it wasn't very easy to analyze. Today, we can take that data, tap into it directly, pull it into R or some other analytics system, look for clues as to when demand is better or worse, and then use that analysis to trade by not really having to staff up that much, because our systems are better, the tools are better. When we talk about big data, we generate a massive amount of data each day. And today we now finally have the tools. We're able to pull that data, capture the insights, and then use those insights to drive our trading or drive our analysis. And of course, you know, one of the big things we've changed in the last couple of years is our analytics used to be very siloed. We had an analytics group in protein who sometimes, not often, talked to the guys in grains. The grains guys talked, but the grains guys in the US didn't always talk to the grains guys in China. Today, we've pulled that analytics group into one organization across the entirety of Cargill. So now we are one analytics group, and so it's just as easily as me to have a conversation with somebody in China or somebody who's in transportation or metals as it is somebody in our commercial business. So the idea is that we're much more an integrated operating company, so that we can push information across faster and capitalize on it. Again, the issue here is that we want to have a system that's difficult to emulate. We don't want every Tom, Dick, and Harry to be able to do what we do. We want a system that is really difficult for others to copy, because if we can do that, that's higher profitability for us. And I'd say, you know, the edge is always moving forward. The things that we did 10 years ago that made us money are now just table stakes. Everybody's doing them. So we're always looking for that leading edge, oftentimes the bleeding edge, if you will, of new techniques, new things that we're doing to try to figure out the market. And that's my last slide. Let me
Michael, thank you so much for your talk. It was very interesting insights on your experience at Cargill and all of the things that you describe on your role on analyzing business opportunities. So I will open the chat for questions.
Yeah, there's a question about blockchain projects or interests. Yeah, there's been quite a bit done on blockchain. I'm not super familiar with it. We did a blockchain project, I want to say at least 3 years ago now, in our turkey business, so that we could track our turkeys, or have the ability to track our turkeys from retail store back to a particular farm. That's the one I'm most familiar with, but there's a lot of work in that area, different parts of the business. I'm not super familiar with it, but I know it exists and looking for different things. I want to say some of the work in that area has been done around sustainability as well, to try to figure out how to track things a little better and make sure that everything's you know, being done in the way that we expect it to be.
Does anybody else has another question?
That's a good question about the future of modeling for long-term forecasts. So we have something we call the long-term model. The term model, I'll use air quotes, is really generous. There's parts of our long-term forecasting where we use things like per capita consumption and parts of our model are driven by per capita consumption trends in, say, meat or wheat or veg oils. And those are partly driven by, consumption expenditures and demographics and those types of things. That's part of the forecasting process, but it's super rudimentary. It's not sophisticated by any stretch of the imagination. Our longer term forecast is really about trying to tap into the insights of our people across our businesses. So when I ask the forecasters in the US, what's the long term forecast for meat consumption? There's nothing, quote, in the model that tells us what that is. It's the models that the people who are the experts, my beef economist who works in Wichita, Kansas, his expert forecast for the next 10 years based on a plethora of models he has built outside the system. And so when we say the model, what it really is a collection of all the best insights across Cargill. And really the value in that is pulling all those insights into one spot so that we're able to see the whole world at once and then make decisions based on sort of a holistic look at the world as opposed to just individual forecasts. Well, I tend to believe that trying to model out 10 or 15 or 20 years certainly has its place. It's not super useful in the corporate environment where we are to help us make the decisions we need to make. Our decisions are, do we build a plant here or do we build a plant there? You're never going to get the kind of confidence, from a set of equations to sort of drive those decisions. You're going to look at experts and make those decisions. And over time, and we've done our model now for over 20 years, to know where you have your weaknesses and your blind spots, and where you have your strengths. So we're able to see things like, in 2005 and 6, when the renewables fuel standard was coming in, it was very obvious to us that the world was going to get extremely tight supply of corn and soybeans, and that prices were going to go much higher than expected. When we saw the ending or the fulfillment of those programs in 2012 and 13, when we had the drought and those programs stopped growing, the drop off from what it was 3x normal prices back down to 150% normal prices, that was also foreseeable. And so then the last 5 or 6 years of relatively low prices and strong growth in the livestock sector was something that, when we work with our experts, that's something that comes out of that process. And so that allowed us to make bets and investments in those areas, for the company. So when we look forward now, it's those same types of insights that we're looking for. Some things can be modeled as economists determine. Other things you just have to. It's hard to codify them, and we really focus more on what our experts think and know. I would answer a question that came up in the previous 2 conversations, just because it's something that I'm passionate about. Somebody asked a question about communication and how important it is to communicate ideas. Obviously, it's table stakes, as somebody said, to have good analytics. We need that, and we teach that. And of course, people get better at that part of it over time. But the best analysis is not worth anything if it's not communicated well. And in our world, we're communicating people who do not have backgrounds in economics, certainly. Most have very poor backgrounds in mathematics generally. So helping them understand things like statistics or the likelihood of something happening is very difficult. And so we end up doing a lot of work to distill our story down to some takeaway points. And frankly, we do a lot of work behind the scenes to have a very short answer in front of people that says, here's what we think is going to happen, and here's a short reason why. And ultimately, over time, you build your street credibility with your traders, so that if you're consistently accurate, it's really more a question of, okay, so what do you think we should be doing and providing the story shortly, as opposed to long analytics. Our traders don't have very long attention spans. They're not analysts by trade. They're traders. They're a different breed of cat. And so, our job is to take, some high level analytics and try to distill it into, buy here and sell here.
Michael, thank you so much for all of those answers, and thank you also to all of the participants who raised those questions. Very interesting.
Thank you.
I apologize because we were expecting another presenter. Unfortunately, he was not able to join today, but at the same time, it gave us some opportunity to have more time to listen to every one of all the participants that we had. So what's next is to say thank you to all of the 3 presenters on behalf of the GSS. And I will set the mic to Tim Woods, who is gonna make some closing remarks. Thank you.
Great, thank you, Carlos, and thank you so much, Mike, and Nate. This is such a great opportunity for all of us that are involved in the academic training side, trying to position our students for careers in this ag business space, and for our students that are looking at careers and opportunities. I always tell my students that the ag business space is such an amazing, dynamic marketplace full of emerging opportunities, and the opportunities for professional development and just the satisfaction of being a part of some of these cutting edge opportunities can be as satisfying as in any industry, and just the opportunities to work both with aspects of the food sector, the environment, capital and finance aspects. I appreciated the perspectives all of you folks brought. You know, I think the things that we're just constantly reminded of as we're working with our students in the academic spaces is the constant need to help build those bridges for our students to the kinds of skills that are valued in the ag business community. A lot of emphasis, Mike Zera, especially appreciate your great emphasis on a lot of the sort of strategic thinking aspects there. I know that's something that many of us really try to place in our courses and work with our students to try to cultivate. Sometimes the value of that is lost in the context of our academic settings, but I know you guys appreciate that out there on a daily basis. Appreciate Nate being frustratingly concise and across the board the importance of communication. Those are really hard things to teach in a classroom setting, and it's just practice. Getting involved in, if your students involved in presenting your work, interacting with others, getting out there into, especially in the ag business space, looking for those opportunities to be involved in either trade shows or outlook conferences or other places where ag business leaders tend to come together and see and hear how things are communicated in the trade spaces, so different from the academic world. It's time really well spent. So Carlos, I wanted to thank you too for all your great work, you and Logan and the others with the GSS group, on behalf of our community folks that are part of the Ag Business Economics and Management section with the AAEA. We'd love to see these kinds of opportunities that are put out there, and we surely want to continue to have the opportunity to bring folks together, other ag business leaders. No reason why we can't be doing this on a regular basis, and sharing ideas and kind of talking collectively about some of the emerging skills and needs and global issues and ways that we need to be thinking about adapting our training and preparation that we're providing in the academic space. I think a lot of great things come out of these kinds of conversations. So thank you again to to Nate Kaufman, to Mike Gunderson, Mike Zare. Hugely appreciate you guys sacrificing some time and coming and sharing with us here today. Some fantastic comments. And again, Carlos and Logan, thank you for your efforts there. Carlos, I'll just toss it back to you. Anything else we need to consider before we tie things up?
I just want to say thank you also to all of the people who attend. And I'm going to say that we're going to work on getting this material available for those who couldn't be here today. Thank you, everybody.
Sounds great. Have a great weekend, everyone.
Bye-bye. Thank you.